What's going on, everybody? Welcome to a Capital Hungry Market Update and Trade Ideas webinar. So, some key important points before we jump into the analysis of looking at what economic events we have on the docket, as well as market sentiment and so forth. We have to understand we are starting a fresh new business quarter and fresh new business month. So it is very common to see a lot of price setups to set up order flow from an institutional perspective that can be pullbacks against our main higher time frame trends in the short term. Let me give you some examples. When we're looking at gold here, you can see at the start of the new quarter, we came exactly to the same previous intraday lows, had sellers liquidate positions and more buy side liquidity generated, where for this new monthly period, if we do not break these lows, we could easily see some upside moves for the new quarter to generate more sell side liquidity and collect more sell side orders from the 1830s and 1840s before continuing down. This pattern of potentially seeing some short-term pullbacks against the higher time frame trend is very much prominent when we're looking at GBPUSD doing the exact same things and rejecting previous lows, when we're looking at EURUSD doing the exact same thing, and even when we're looking at the US 30 stock market index, where as long as it's still trading above 31K flat, does have the potential to do some pullbacks for this new quarterly and monthly period to set up positions for our higher time frame trend. Our higher time frame trend fundamentally and technically is stock market bears, US dollar bulls, with of course pricing in more interest rate hikes to come, and gold bears on the higher time frame, still very bearish here. Okay, so some things we want to keep in mind: potential for pullbacks against the higher time frame trends with the new quarterly and monthly setup. Basically, if gold doesn't trade back below 1790s, if a dollar has a pullback from these highs and doesn't break above 105.4, then that shows me a lot of the information advantage, aka the central bank rate hike cycle by the Federal Reserve, a lot of that information, as well as rumors of a 75 basis point hike for the July meeting, with minimum expectations of a 50 basis point hike, all of that information has been priced in. So you can see across the board, dollar rejecting previous highs for the start of the new monthly and quarterly period, Japanese yen rejecting previous lows, gold rejecting previous lows, and our dollar pairs correlating in very similar fashion. Okay. So, of course, when you zoom out and you look at EURUSD, very bearish technically, as well as fundamentally on the dominance of the US dollar as your world reserve currency and global business currency. And as there's been a lot more demand in the dollar ever since the Fed started signaling towards tapering, started the tapering process and started raising interest rates. This is the same type of structure on GBPUSD. And this is the reason why the stock market and commodity precious metals such as gold has been so bearish. But you can see it's very, very common where if we don't break previous price sensitivity areas to get aggressive pullback phases, whether it be a large pullback that can extend for potentially weeks, or whether it be a short-lived pullback that can only extend for potentially days. It does look like higher probability that when I'm looking at pairs like GBPUSD, EURUSD, and gold, if we don't break these current lows, we can go back up to specific sell side liquidity zones before having continuation deeper higher time frame sell plays, with the safer sells being below those lows at that point. Same thing when you zoom out and look at EURUSD, a pullback to the same sell side liquidity zone would be very much evident unless we just trade below the current lows and have the continued safer sells. And the same thing when you come and zoom out on gold. If gold doesn't break this very key demand zone area, it wouldn't be out of the ordinary for the new monthly and quarterly period to see an aggressive pullback to the same side, sell side liquidity zone before continuing further bearish. So some things to look out for is price setups institutionally for the new quarter and new business month, and these make or break price points across the board, with gold being at around 1785, 1790, GU's make or break price point at around 1.195, 1.12, EURUSD's make or break price point around 1.038, 1.04, and that correlating to dollars make or break price point at 105.5. Basically, if I see that dollar as the main world reserve currency individually fails to break back above 105.5, all that shows me in the short term is that there is not enough buy side liquidity to break higher. A lot of the Federal Reserve interest rate rumors have been priced in. We also have expectations of weaker US data, and we can see a bearish pullback phase on the dollar to revisit this demand zone at 103.6. So this type of movement here, rejecting these highs and having the bearish downside pullback for the new business month and new quarter, would signal to me from a fundamental perspective that so far a lot of the rate hike rumors have been priced in. That will correlate fundamentally to gold having a pullback, GU and EURUSD also having pullbacks from those lows. So again, main things to look out for as we're starting out the new quarterly and monthly period, and also as we're just coming off of a US bank holiday being 4th of July. All right, now we do have a lot of economic data this week from global regions and parts here. When we're looking at it across the board, this is what we have to focus on for overnight and of course through the sessions to come. Basically July 4th here, just some services PMI during the Asian session to close off the day from China with already very low PMI data. Then July 5th overnight, pre-London and London hours. At 2:45 a.m. Eastern, we have a medium-term report for France being the monthly industrial output. At 3:45 a.m. Eastern for Italy, we have the services PMI reporting. At 3:50 a.m. Eastern, we have France's both services and composite PMI reporting. At 3:55 a.m. Eastern, we have Germany's services and composite PMI reporting. At 4 a.m. Eastern, we have services and composite for Eurozone overall. Then at 4:30 a.m. Eastern, services PMI for the UK, followed up by reserve asset totals. Then at 8:30 a.m. Eastern, some Canadian data with building permits on a monthly report. And 10 a.m. Eastern, factory orders monthly for the US. I'm expecting weaker data on the PMI, but it's already very well known and expected that the data may be weaker. So it's probably already priced in. We're expecting a little bit of a rebound on factory orders, but I could still see this potentially being a miss during our North American trading session tomorrow. Other than that, we do want to keep out for the Bank of England publishing their financial stability report, some Bank of England speakers as well overnight. And other than that, not too much else going on until later in the middle of the week with a lot more ECB and Federal Reserve speakers. Holidays, we just had the Independence Day, July 4th for the Americans. Happy July 4th Independence Day to all my American viewers and members. But other than that, in terms of economic events, not too much else to focus on the docket. When we are looking at gold here, ever since this date of April 21st, we have had a bearish fundamental information advantage that the market has been adjusting order flow to accordingly, being an increased probability of aggressive rate hike cycle. This is the reason for this extended downside move where we had these lower lows printed. From these lower lows printed, we essentially had a short-term pullback phase pretty much to the 1870s, where we had a sell-side liquidity zone at previous lows being respected. And overall, even when we had bad economic data reports in these various situations stated here, any upside move on gold has been faded out or has been very short-lived, as we have reached our higher time frame targets of the previous lows printed by sellers post-April hawkish central bank IMF meeting. Now, even though we still have some intraday bearish market structure being respected, it would not be out of the ordinary that we could see some short-lived pullback phases to the upside to the 1820s and 1830s before continuing bearish again, with only safer sells at this point in time being if we had straight continuations back below 1780s. So what we have to look out for is a couple of things. The rejections at this very key demand zone and lows printed at the 1780s demand zone, the rejection we're getting from there so far, with sellers liquidating positions and more buy-side orders being generated, where if we don't break back below there, we can easily see gold have some deeper pullback phases before having continued sells to the downside. So when I'm bringing that information together with some of the key levels as well, what I would be looking for on gold is, even if we get pullbacks to 1795 and fail to break, some short-term buys from 1803 and buys from 1812, potentially looking at our first sell zone around 1820, retest of bearish market structure. Again, for the new quarterly candle setup, which is just how we observe price action from a retail trading perspective, at the end of the day, behind the scenes, it would be better price setups for the institutions to liquidate buys from better positions and also have sell side liquidity generated from better price points of interest. Obviously, if we break above 1820, you would just want to have the sells be invalidated and be continuing to extend the buys, especially if we have weaker economic data, which is expected from the US after midweek. Otherwise, safer sells at this point would be if we just break below that very key demand zone at 1789 and 1781 sells. So some things to keep in mind: lower volume and volatility at the moment. Coming off holiday, a lot of the fundamentals priced in regards to rate hike signals and more rate hike rumors. Rejection at key demand zone, 1789 previously, and new business quarter setting up. Okay. So even though I'm still on a higher time frame bearish bias on gold, I highly advise people to watch the macro analysis, both shared in the private channel and shared on YouTube for free, which will give you a much larger and deeper understanding on the concept shared. Even though we're in a higher time frame bearish bias, there is the potential for short-term upside for this new quarterly period, which would just be price setups before continuing down further. We would really need new fundamental catalysts of market fear, uncertainty, and doubt that we haven't seen already, that hasn't already been priced in, and being a new information advantage for the institutional algos to digest and adjust order flow to accordingly. Otherwise, these are the trade ideas I see on gold. This is going to be a very similar type of idea when we're looking at GBPUSD as well. So GBPUSD, if we break above 1.2165, 1.224, 1.23, I do see for the new monthly and quarterly period, short-term buys to the upside to retest higher time frame bearish market structure and sell side liquidity zones before continuing with our overall bearish trend. Otherwise, at this point, if we just continue down and break below 1.1985 key or higher time frame key level in previous lows, I would just be looking for some of the continuation sells to the downside. Some things to keep in mind are, of course, the new quarterly setup and some of the UK PMI data around 4:30 a.m. Eastern. If that data showing any slight improvement and dollar is still relatively soft, failing to break that make or break price point of interest we have highlighted, it would be very evident to see a pullback phase occur on GU, take advantage of that short-term pullback all the way to better sell price points of interest. Otherwise, safer sells below 1.1985 and below 1.189, 1.19 flat. This is going to be a similar theme highlighted on EURUSD, as both GBPUSD, EURUSD, and gold have all been correlated not to the dollar directly, but to the central bank action of the Federal Reserve and what impact that has had in terms of on the US dollar as your world reserve currency and business currency. So if EU breaks above 1.045, 1.525, I would be looking for a retest of this order block low and sell side liquidity zone that drove us into these lows and jumping back in the higher time frame trend in that fashion. Otherwise, safer sells at this point are really only below 1.034. Anytime I mark out green boxes, those are potential buy zones, with red boxes being the potential sell zones at the price points stated and given out accordingly, right? So we have gold, GU, EURUSD, and dollar at very specific price points of interest at previous lows when you're looking at GU, EURUSD, and gold, with dollar obviously the inverse at previous intraday highs. The same time we're having a new business quarter setup, which would make sense that if we don't break those areas of interest, we can see some short-lived pullback phases. Okay. Now, USDCAD. With USDCAD, I can see buyers jumping back into the market if we trade above this medium-term zone at 1.29, 1.298, and 1.305. Otherwise, only any further sells on USDCAD if we don't break back above 1.29 and we just have a break in retest below 1.283 key level. Okay. And same thing with US 30 here. Overall, the stock market has been in a bearish market as the US has been in a recession. But you can see every time we have these significant lows created, we have very aggressive pullback phases that occur. You can see that previous weekly candle here got engulfed, followed up by a weaker weekly candle that followed up here. And this new quarterly period, if it doesn't break or revisit these lows, can easily still continue this bearish market structure and channel, coming up to 32.5 or 33K before seeing further sell-off to revisit pre-pandemic highs and potentially even deeper. As we have current weakness in the US dollar, a lot of the rate hike signals and rumors and action being priced in, we have weaker volume and volatility in terms of the fear index and fear grading. It would be evident that if we're holding above 35, we could see that short-term pullback phase and dead cat bounce in the equity markets, which is very, very common in how a bearish market behaves in the stocks due to human psychology and greed of these dips being bought up, mainly trapping retail side liquidity and also giving short-term squeezes for the institutions in Wales to liquidate positions from better sell points of interest every single time. So when we bring that concept and ideologies together here, on US 30 stock market index, even if we pull back to 3750, break above 31,150, break above 31,700, I would see stock market buyers trying to save face, a dead cat bounce occur in pullback from the lows, which would be an institutional price setup for the new quarterly period, potentially coming to the same sell side liquidity zone highlighted to the left before seeing a continued sell-off. Otherwise, only safer sells at this point on US 30 below 3,300 and below 30K flat. So you can see a common theme with US equities, gold against the US dollar, XAUUSD, our US dollar pairs, is looking for short-term pullbacks, which is very common when you adapt to the market waves, as a lot of the information advantage, aka the fundamentals, the institutions, of course, digest through their algorithmic trading, has been adjusted and priced in, and we are starting out a new business quarter and new business month period. Okay, so gold, GU, EURUSD, USDCAD, US 30, last but not least, GJ. Now, GJ is a different beast. We're on the higher time frames. GJ is still very bullish with this new monthly and quarterly candle not having much of an upper wick, more than likely going to be turning bullish at some point through this month to fill this range. The reason why GJ is so bullish, even though we've had poor economic data or more recession scares developing globally and fear developing, is that all of that takes a back seat to the central bank monetary policy, as they are the cartels of the currency. So the major driving factor of GJ upside is the difference between Bank of England rate hikes and a dovish stance from the Bank of Japan, keeping interest rates low and in the negatives and their bond buying program active. So we do see a little bit of indecision here, but when I'm looking at GJ and looking at this very specific demand zone and price sensitivity area of interest, as well as some of the short-term bearish market structure from these highs, as long as we're still trading above 162 and 163, I see a lot of potential for upside still to revisit these intraday higher highs at the 168s and so forth. But obviously, we don't want to be taking huge ranges or anything of that nature. So what I would see in the short term is if GJ in the short term, and we still see some short-term yen strength, breaks below 164, I can see short-term sells to revisit 163.2 or 162.8 before seeing buyers back into the table. Otherwise, safer buys on GJ is coming above 164.8 and 165, just the continuation buys on the higher time frame. Red boxes being sell zones, green boxes being buy zones. So GJ is still bullish on the higher time frames as the Bank of England is more hawkish, continuing to raise rates, and at the same time, the Bank of Japan is more dovish, keeping interest rates in the negative and their stimulus program going through their active bond buying. We do still have the potential for a new quarterly setup to make a deeper lower wick and retest these price points of interest before continuing up. But overall, GJ is still very bullish, but these are the trade ideas I see across the board. With the fundamentals and technicals on gold, GJ, GBPUSD, EURUSD, USDCAD, and US 30. Keep in mind from a risk management and psychological perspective, just coming off a holiday, lower volume and volatility, very early into the new business quarter, a lot more economic data in the second half of the week, but hopefully this analysis, information, fundamentals, technicals, trade ideas, psychology, and so forth is helpful to all the viewers. This will be saved and uploaded, and you can re-watch it, share it around as you wish.